Thanks to everyone for standing by, and welcome to the PainChek Investor Webinar and Q&A following the company's quarterly update that was announced this morning to the ASX. All participants are in a listen-only mode. There will be a presentation lasting for approximately 20 to 25 minutes, followed by Q&A. So if you have a question that you'd like to submit, please type it in using the Q&A function within Zoom, and note this whole session is being recorded. On behalf of PainChek today, we have the CEO and Managing Director, Philip Daffis, as well as the CFO, Ian McAdam. So to begin, I'll hand it over to Philip. Please go ahead.
Thank you, Matt, and good morning, everyone. Thank you for attending the webinar today. I'm actually speaking to you from Boston in the United States. I'm here with the PainChek team. We're attending and presenting at the Leading Age Conference, which is here in Boston, starting this weekend. It's the largest aged care conference with about 7,000 expected attendees from all over the US. And this is very much part of our global rollout, or part of our US rollout and market launch, post FDA clearance, which we received earlier this month. So delighted to be here. The whole team's delighted, and we're looking forward to a really exciting 4 or 5 days. And today I will obviously present, as Matt mentioned, the quarterly results as posted on the ASX this morning. So PainChek, for those who haven't heard the story, our purpose as a company is to give a voice to those people who cannot reliably verbalize their pain. And on one extreme, that's people living with dementia, people who've lost with cognitive impairment, who may be in an aged care facility or a home care setting or even a hospital, but are unable to reliably communicate. On the other side, we have our infant products. That's for pre-verbal children, range from infants from 0 to 1 year of age currently, and moving towards other older children or kids between 2 to 3 years in the future. What we have developed as a company is 2 products for these markets. Both are now on the market. The adult's been there for some time, and the infant has just been released, as we'll talk about that this morning. Some highlights from us. So first of all, look, the company PainChek, we are the world's first and only regulatory cleared AI-enabled SaaS platform to assess pain for those who can't verbalize. And this is administered, or the product is an app, but it's off the Apple Store or the Google Play Store. We've established the business in multiple markets in Australia, New Zealand, the UK, and Canada. We've got more than 115,000 beds under license across more than 1,900 aged care facilities. And that equates to about 5.6 million ARR with strong year-on-year growth. We have a good net retention rate of 100%. We're demonstrating long-term customer commitments, and many of our contracts now are 2 and 3 years in term. So we are seeing long-term commitment from our clients, and we've actually performed more than 14 million, or they've performed more than 40 million pain assessments since we started. So we've built probably the largest pain database in the world. But our goal is to be a global business, and our adult product globally has potential value for about $4 billion as a flagship product for us. And we are now at the position where we can actually look at this global market in more detail, because as of this month, we got FDA clearance for our adult products, cleared on the 6th of October, and that's now opened up a market we believe to be worth at least $500 million per annum in the United States, as being the only regulatory cleared product for pain assessments in the United States. On top of that, we've just started literally the last couple of quarters, but the infant product has been launched only in Australia right now. We're really building the model for the product and the business model, and that has a significantly larger market size or market potential than the adult product. And I'll be covering the infant product as I go through this presentation. Sorry. So let me touch on the goals that we set ourselves at the beginning of this year, because I want to come back to this and reflect on it at the end. So we set 3 key goals for us as a business. And the first one was we wanted to get into the United States. It was key. It was the biggest market in the world. We wanted to get our adult app cleared into the market. We want to establish PainChek Corporation as a business. and obviously get first sales. And when doing so, expand our partnerships so we could actually rapidly penetrate the business. So that was really our number one goal for the year. In addition to that, we wanted to continue to grow in our core markets. That's Australia, New Zealand, and UK. And we just started in Canada, and drive our businesses there towards operational break even. And within doing that, we wanted to show that we could also enter the home care and hospital market sector. And then finally, with the infant product, we wanted to show that we could actually enter the market, get the product up onto the App Store and Google Play stores, commercialize, and build partnerships in those areas as well. I'm going to cover the progress on these areas as we go through this talk, and then come back to see how we've achieved. So let's start with the adult business and the core markets. And you've seen this slide probably before. Our PainChek adult product is a software as a service medical device. It assesses pain for those adults who can't verbalize. And it's actually a two-step process. We start off with the app by opening the camera on the app, using the AI to assess the facial expressions that indicate pain. It's a 3-second snapshot of the face, and it's a little bit like going through passport control or going into your bank these days, except we don't look for a face-to-face comparison. We analyze the face and pick up the 9 microfacial expressions that indicate pain and document them for the carer to use as part of their pain assessment. We then guide the carer through a digital questionnaire and checklist to look for other observations of the person's pain, and then that provides a total pain score and a total pain severity score from no pain, mild, moderate, severe. It happens in a matter of a couple of minutes, and it's documented to our back end so we can actually provide data and monitoring and data analytics for all our customers, which has significant value. In terms of progress this quarter, so we now hit the 115,000 contracted licenses. That's 5.6 million in terms of ARR, and we've got an increasingly strong pipeline of sales. That's an 18% increase year on year on contracted beds and a 16% increase on actual ARR from the prior year. Two very important progress aspects for the past quarter. We're very delighted to say that Catholic Healthcare have actually signed an agreement with us for close to 4,000 licenses, but it's a mix of all of their residential care and their home care. So it's the first time we've ever had an agreement with one client to cover both aged care and home care for all their licenses. So this is a significant first step process and showing we're in the home care sector. Secondly, we've also confirmed that Edinburgh Royal Hospital have actually completed the first phase of the pilot with the track care and now progressed to a second phase, which is now using the product or using PainChek across the hospital into their different sectors. And that's very much into different wards, including orthopedics and post-operative surgery. So that's progressing very positively. The other thing we continue to do is we try to implement our beds as fast as possible. I mean, there's always going to be a delay between signing up a client and then implementing. That's natural. But what we've developed is this new tiered activation agreements where there's fixed implementation dates and prepayments in place once we actually sign up the contract. As an example, Catholic Healthcare have agreed to actually implement prior to the end of this calendar year for their aged care facilities, and then roll out the home care product in a similar time frame. So we're catching up constantly between signed up contracts and implemented contracts. The other thing you can see here is that our ARR has now achieved above the 5 million mark. And once those beds are implemented and we achieve that mark, actually that covers our core operating costs for the Australian, New Zealand and the UK businesses. So we're charging towards getting towards operational break even and then long-term, obviously, profitability. On the left-hand side here, you can see our contracted beds. Towards the middle, you can see our qualified pipeline. We have about 47,000 licenses qualified, either in negotiation or quotes been issued, and we look to actually conclude those for the next 1 to 2 quarters. That will take us just in our existing markets to more than 160,000 beds and 7.7 million ARR. So we're always building the pipeline. It's always expanding as we expand into existing markets and into new. The other thing I always like to share with you, and which we see and we monitor very regularly, is the number of pain assessments, the actual utility of the product. As you can see, again, we've doubled the number of pain assessments that have been conducted over the past year. We've now hit there's been more than 14 million pain assessments conducted across more than 150,000 actual residents. So you can see there's more residents been assessed than actual licenses. This shows strong ongoing growth quarter on quarter for the use of the product. I would add that we've now got more than 16,000 carers trained, which shows you that PainChek is truly a state-of-the-art and a well-accepted product used in aged care. Now, all that data, all those results, all those pain assessments go into our back end and to our analytics, and we provide now really good insight to our clients. We provide insights to our clients so they can actually monitor how they're managing pain, how their team is reducing clinical risk for their patients, while also improving the care they deliver. So we deliver pain trends and graphs. We provide an automatic monthly report called Health Check to our clients. And the analytics that we provide are also via open APIs, so we can embed our data into their docking stations and their reporting systems. This means we're fully integrated into their workload, and actually the analytics are as important now to our clients as the actual pain assessment itself, because it means they can deal with accreditation issues and reporting issues with the governments. So that's the progress to date in our core markets. Let's now move to the first pillar, which was the US and the de novo clearance. I just want to really make sure that people understand the value of the de novo clearance. This is not a standard FDA clearance. It's not a 510K. It means we are a novel product now accepted for use in the US market. So if you look at the bottom here, the definition, de novo is first of a kind medical device. We've established a new classification and a new product code with the FDA. What the FDA says is that effectively our device is novel, but it's also safe and effective for clinical use. And when we've been in the US last week or two, I can tell you, people, once we know they've got FDA clearance, it ticks the big box. They don't say we need to do pilots or studies. They say, okay, it's clear, you've got good results, you've got good clinical data. Let's talk about how this product can be implemented. So we're way ahead in many ways of when we started in Australia and New Zealand and the UK, because we've actually done all that clinical work in the US. What does it mean? Okay, on the left-hand side, we're first to market and with a clear differentiator. And so therefore, there's no other product that's regulated for the use in the United States. But it also means that we've got significant competitive barriers. We've got a real market lead. And I just want to say that I've had a few comments back, but some people saying, well, it's AI, people can copy the AI, they'll ever replicate the product very rapidly. That's not the case. That's not the case in the medical sector. I can tell you, if somebody wants to start today to actually build something like our product, well, there's a 4 or 5 step process which we've gone through and completed, which takes years to get through, including doing a US clinical study and having the AI technology validated on all the American populations. It takes a long time to build, a long time to validate, and a long time to get clearance. And on top of this, we have a patent protection in the United States till 2038 and a copyright on the way the product's developed. So in simple terms, and I can go into this more detail another time, we probably have a 4 to 5 year lead in the US market having a de novo product. And actually, I would mention one thing I just noticed just recently, a company called Epiminder, who also, another Australian company, who also got a de novo clearance back in April this year. Well, you know what? Off the back of that de novo clearance, they're just doing 125 million IPO. $125 million IPO just on the back of that clearance. They don't have sales yet. I mean, they're at the early stages, an interesting product. I know the technology behind it, but that goes to show you, if you get a de novo product, you have a significant advantage in the market. And I don't want any of our shareholders to underestimate what it means. And the competitive barriers we have in here are enormous. But on the positive side, what it also means is that because we are the de novo, because we are the predicates, we can use our adult product to apply for PainChek to go into the home care sector and the hospital sector in the United States. And it's going to be quite straightforward, I believe, because if you look at our clearance, it says we're cleared for use to assess pain for people living with moderate to severe dementia. Well, those people also exist in home care and hospitals, and were cleared for use by doctors and GPs and carers, and that's who serve those sectors as well. So that should be a pretty straightforward approach, and therefore that will take us from 175 million opportunity in the United States to about a 500 million market opportunity in the US. And finally, not to labour the point, but FDA clearances really accelerates regulatory clearance in places like Japan and Brazil. And that's something we have on our radar now to actually use that data to go into those markets. So what's happened? Well, I think we got clearance on October the 6th, and October the 13th, we got our first sale. The Jewish home family in New Jersey was our first customer in the United States. This is some photographs of our team with their team going through the training program. It's been implemented, so it's a 3-year deal. It's being paid up front. We've implemented, so there's no delay in implementation, and they're starting to use it already. So as you can see here from the CEO, Carol Silver-Elliott, PainChek technology aligns with our mission to deliver better elder-directed care, provides our teams with better insights and support our residents around more dignified treatment. So Carol will be with us actually this weekend at the conference, and she's already introducing us to lots and lots of clients that she knows. She was the president of the Leading Age group. She knows almost everyone in the United States market. So we've got a great first start in the US. Not long after that, on the 23rd of October, we actually attended another conference in Las Vegas. This was a large client attendance, 3,000 people attended. We had a good presence there. You can see the booth we set up, all the collateral and the branding was set up. Very strong engagement at the conference, and significant lead generation. So we're on track for rapid sales take up in the United States. And of course, the next conference is the one I'm at now. That's the Leading Age conference, which starts on the 2nd of November. And we're expecting 7,000 attendees, and there'll be 400 exhibitors. It's massive. It's nothing you will ever see in Australia. It's enormous. Just want to share with you, and this is on the website, so I'm not going to go into any detail, but share with you on the website. This is the collateral that we have for the United States. We actually developed this in advance of the FDA clearance because we just knew we were going to get it. So we've got the global brochure, which talks about PainChek as a company and how it works. That's on the left-hand side. The second one along is our outcomes brochure, which shows that we're not a fly-by-night company. We've got great experience of use in Australia, UK, and now into the United States, so that US clients can see the performance of the product. The third one along is actually a summary of the work we did with the FDA and the de novo results. So all the clinical validation results, which means that there's no need to redo the process again. The fourth brochure is the science behind PainChek. And the final one is an example of one of our partners, Point Click Care, that's a brochure we did with them together. It shows the fact that we've got good integration with Point Click Care, and they cover more than 1 million beds in the United States. So all that collateral's up on the website. I encourage you to have a look at it. It's actually really good. This slide, I'm not going to talk to all the points but I encourage you to have a read of this afterwards. This is the feedback we got from the first conference in Las Vegas in terms of the real value. So I'm just touching a few points. The first one's about the face value of the PainChek app. It fits really well in the United States especially with value with those mission-driven, faith-based, and non-profit operators, the ones where quality of care, not the return on investment, is the primary goal. That's where we fit in actually the best, and that's about 60% of the US market. So that's where our initial focus is going to be. In terms of compliance, there is seem to be a dislink between those who get people who can communicate seem to get better pain care than people with cognitive impairment don't seem to get the same pain treatments. So this actually addresses some of the disproportionate violations between the two and makes sure there's no deficiencies between the two cohorts of residents. Very, very valuable. On the data analytics, we have a product. It's interesting. The technology that's been used here, or the Pain AD, which is like an Abbey pain scale, has a very poor inter-rater reliability. That means different raters or different carers can get different results in the same patient with the old paper-based systems. It's like a 0.5. It's like a flip of a coin between one to the other. We have a 0.8 inter-rater reliability. We've got 80% high accuracy in terms of different people, different carers rating different residents, and that really drives better outcomes and more meaningful pain data. And finally, we're starting to see already new opportunities in the rehab area from our clients we spoke to in Las Vegas. So really good results from our first stab, and we think we're going to do even better this weekend in Las Vegas. So to summarize, if you look at our journey, we use Australia and New Zealand as the launch pin for our business, and we've done very well with 71,000 beds. In the UK, we've developed PainChek UK. We've actually more than doubled our beds in the last 18 months and have a very good base there, and have got some great outcomes data, which I presented to you before and which we've shared with our clients or new clients in the United States. Canada, we've just started, but we've actually moved our head of sales from Australia, David Allsop's moved across to the US with his family, and he's heading up the Canadian business and working very closely with the US. And of course, the US now, we're FDA cleared. We've got a core team here already established with Nick Garofoli being set up as a head of business development. And we've got good integration, good partnerships with Point Click Care, Eldermark's in progress, and also a group called Yardi. Yardi are actually, they're a significant size in the US and in the UK. And so they're giving us strong access to a large chunk of the US market. So I'll hold there on that, and I'll just quickly touch on, two more things. While our focus will be on those markets just covered for the next 6 to 12 months and growing the business there, we'll also finish off the validation work in Germany to get moving for the German markets, and we'll use the FDA data to apply for Japanese regulatory clearance. That will take 1 to 2 years, I reckon, but the FDA data really helps us go faster. So significant global progress for the business. I'm going to move on to the infant app now and change the tone. Obviously, with infant product, our real theme is making infant pain visible. We've been sharing this message with clients, share message with therapeutic companies. They love the story. We are in that case of making infant pain visible so it can be treated more effectively. The product you may have seen already, I've had some videos in the past, but the infant product is a much more consumer-friendly product. It's just does the 3-second analysis of the face, but it also documents the historical pain events. It documents treatments, including medication, all in the app. The training's all built into the app, and we're consistently improving and driving that training, and it's very user-friendly. So it's a real lock and load product ready to go straight off the App Store. Our focus is, we believe the biggest market opportunity for the consumer, and that's parents and families and daycare centers using the product. We also recognize the importance of the healthcare professional market, both as an ability to sell into, but also for them to be recommenders, promoters, advocates for parents. And we've started down that process as well. And finally, partnerships. There's a whole host of partnerships there from working with medtech companies and pharmaceutical companies. And we're making some really good progress with big pharma who love the product, who can see the fact that putting together a pain care strategy with us as the diagnostic or the assessment and them as the treatments can really play great value. And that started as well. So all three of those are happening in parallel, but we've started very much in Australia and we're refining the product to get it ready to go to the international markets. So to date, in terms of actual downloads, we're getting more download data from the App Store and the Google Play Store. We've had now about just under as of the end of September, just under 400 total downloads of the product. Of those, 324 downloads were first time. We've created 151 accounts. That means accounts that are using the product. And that's a 47% conversion rate. We're now using that data. We're looking and monitoring the conversion from the download to account registration. We're looking and monitoring how rapidly the first use of the first pain assessment is happening. We can see all this. We can track this online. And we're also looking how many people are converting from free trial to paid subscription. So all these elements are being assessed and managed and monitored through the Apple and Google Play stores. What are we doing in terms of, well, completion? As I said, we've completed and launched the product on the Android. We've optimized the self-registration screens. We found the screens were a little bit clunky, so we've changed that, and we've reduced the free of charge trial from 30 to 14 days. And the reason for that is simple: is that if you've got 30 days to use it, you may forget, and to bring it back into 14 days actually gets things going. And of course, when you first download the app, your child may not be in pain, so you want to use it when you need to. The other thing we've done is we've worked now with New South Wales CPR Kids. They're a group of pediatric nurses. They love the product. They've been working with us, and they've also started to introduce the product to their nurses and their trainers. And these are people who can support and advocate for PainChek. So what's next? Well, in progress right now, the New South Wales CPR Kids group are also helping us with the pain educational material for parents. We're redesigning the website to improve the download of the product, and we're improving the user experience to improve the actual retentions or conversion rates. And finally, what we're looking to do next is obviously look at the pricing. We're shifting registrations to go more towards the annual and lifetime. We're moving away from monthly and 3 monthly. We're executing more on the social media theme. And we're looking to collaborate more with opinion leaders and parental networks. So all these are happening in place, and we now have Sasha Grant on board as heading up our growth, and she's managing this whole program. So what's the strategy? Strategy is to continue to expand in Australia, continue to learn and expand, where there's about 300,000 babies per year. And in early next year, we're looking to go into the UK and Canada because we have a presence in those markets and we have regulatory clearance for the product. And then look to assess how we go into the EU, where we have CE mark clearance, and look for the German and French market, which are similar size to the UK. And also then finally with the US market, we'll be following up with the FDA to look at the regulatory pathway for the products. And there's 3.6 million children born each year in the United States. So focus on Australia right now, but get ready to broaden into those markets early next year, and as with the products and technology. So why don't we just finish off on progress? So I started off to say, where did we start at the beginning of the year, and what was our goals? Well, as you can see, we've actually done very well. We've actually got into the US, we've established PainChek Corporation, we've got the clearance, we've got our first sale, and we've got some significant strategic partners in the market already, including Point Click Care, Eldermark, and Yardi. We've continued to penetrate in Australia, New Zealand, UK. We're now at the stage where we've got sufficient beds to drive our Australia and the UK businesses to an operational break even. and we've now got sales into the home care and hospital markets. And finally, as you've just covered, we've entered the infant app into the App Store and Google Play Store. We've started the commercial launch. We've got hundreds of downloads, and we've built strategic partnerships for global market penetration. So I just want to sort of finish up by saying thanking the team. As you can see, the team's expanded. The top team at the top there, our core team, has been there for quite some time. But bottom left, we've got Sasha now, head of infant growth. David's moved across to Canada to head up the Canadian business. Tandeep Gill's in the UK. Christelle is managing the Australian business now and doing a great job. And Nick Garofoli, based in New York, is actually heading up our US business. So we've got a global presence and a global team. Quick thank you to our board for ongoing support. And then finally, in terms of our financial information, I'm sorry, it's slightly covered by this. So we are now, as of yesterday, we have a market capitalization of close to $100 million. We have 6.3 million cash in the bank and zero debt. As you can see, strong shareholding by Peter's Investments, the founders, and the board and key staff. Why don't I just hold it there, Matt, and come back to you and take any other questions?
Great, thanks, Philip. As you mentioned, we'll move on to the Q&A. Again, if anyone in the audience has a question they'd like to submit, type it in using the Q&A function within Zoom, and we'll jump into those now. Philip, the first one is, will PainChek be listed on a US stock exchange?
There's no plan to do that at all. I mean, I take my Cochlear experience. We never listed in the US as well. However, what I would say is that because we're in the US and because of the de novo, we will attract a lot of US investment, and therefore we have to have the right presence and the right optics to attract US investors. I think we'll get a strong number of US investors come into the PainChek, but we can do that through the ASX. Cochlear did that very successfully for many years, so I don't see a listing in the US.
Thank you. The next question was, has InterSystems or any other software companies proposed a takeover or substantial investment?
We've not had a proposed takeover or substantial investment. However, we are a listed company, and it's hard. If there was any approach to us, obviously we'd entertain any discussions that would make sense from especially from a significant player that would actually accelerate our business. So at this stage, none. But we'll obviously listen to anything that was offered to us.
Thank you. The next question is, can you confirm the 10-for-1 consolidation genuinely benefits shareholders and isn't linked to a future discounted capital raise?
Can I ask Ian? Ian's our CFO. Ian, do you want to actually take that question?
Sure, yeah, thanks. Yes, it's not linked to a cap raise. We look at this as being a good time with the entry into the US, and the forthcoming AGM is to go for a consolidation, which we think will strengthen the share price. We've had some interest from institutional investors, and so that will get them on their radar for investing in the company as well. So I think it's a benefit to shareholders by going through this cap raise. And by going through the AGM this year, the timing for the AGM it saves a few costs rather than holding the EGM later in the year.
Thanks, Ian.
Yeah, if I could add to that, just saying, look, again, back to my Cochlear experience, it strengthens our position, I believe, and gives us better optics with US investors. And therefore, I think it's very positive for shareholders. There's no dilution to shareholders. There's nothing changes in terms of how the shares operate.
Thank you. You touched on this during the presentation, Philip, with regards to the appointment of Sasha for the infant app. Can you just speak to any specific revenue goals, expected market penetration, and how you plan to convert early downloads into recurring revenue?
Yeah, good question. I mean, we don't give forecasts on that, but what I would say is, Sasha's been on board for a few weeks now. She's doing a great job. With the strategy is very clear, which I covered a few minutes ago. We want to finalize the work in Australia, validate the business model in Australia, like we did with the adult product, and get ready for early next year to get into the UK markets, Canadian markets, and mainland Europe. So yes, we'll keep updating as to how we progress. But I do think that we're getting the pricing right, we're getting the mix in terms of the utility of the product right, and we're getting the support from the healthcare professionals, which I think is really critical to make this work. Because the more they support it, the more they guide people towards it, the word of mouth will expand, and the product will further expand in terms of its utility and the sales. Matt, you're on mute, I think.
Apologies. The next question is, can you provide any guidance on cash burn break-even targets and the goal of being cash flow positive?
Well, maybe Ian wants to add in as well, but I think the way I look at this is that we see this in a 2 or 3 phase process. I think the way we are in Australia, New Zealand, and the UK, those markets, we're on track to get to what we call I've mentioned operational break even, and I can see that happening within a year or so, within the year from here. And of course, now we're investing into the United States. And look, we've made some broad calculations, but it's such a large market, the US, that once we get to around 10% penetration, which we did in the UK quite rapidly, and in the UK and Australia very rapidly, and of course, in much better position in the US because we're the only product regulated and we've got all the integration and partnerships set up already. Once we get to around a 10 to 15% market penetration, I think that basically takes us to a very, very strong position where we're close to break even as a business for those markets without obviously investments into other places. Ian, do you want to add any comments to that?
Only just to reiterate that we're in our current markets in ANZ and UK. We got some good cash flow. We just released the 4C this morning. Good receipts from customers, but we're not going to stop at those 2 markets at the moment with that penetration. We will get to, as Philip said, the operating break even for those, but we want to continue investing to get a bigger base for the company, and yes, in infant as well as the US and the wider markets, and that will get us at a later date to get to that.
Thank you. Philip, a couple of people have just asked on Scotland, are we still communicating with them, and any insights or potential timeframes if they wanted to proceed?
Oh, absolutely. No, good question. Yes, we have a meeting actually. There is a meeting in, I think it's the 10th of November or 11th of November with the Scottish, the Digital Health Scotland. They love our outcomes data. They've seen the cost benefit analysis. Well, actually, the data was developed with them. It wasn't our data. And we are meeting with them on the 10th or 11th of November to talk about the next step in that opportunity to actually broaden our access to the whole of the Scottish territory. So good progress. So it's good progress with Scotland with the aged care group and the Scottish governments and care inspectorate, and it's good progress in Scotland also with InterSystems at Royal Edinburgh Hospital.
Thank you. The next question is, what are the next steps with Point Click Care? Is there a rough timeline we expect?
Point Click Care. Well, I think I covered that. Point Click Care, we have an integration. In fact, I was with them. I was at the conference in Toronto. It's been a busy few weeks last week. We're meeting with them this week in Boston. We've gotten good integration with them already. We're refining the integration to make it even better. We've got some feedback from clients what they'd like to add. They're an integration partner with us. And more than that, they're helping us with marketing. They're opening up doors to clients, but they're not selling for us. We're doing the selling. They are co-marketing and making sure that when PainChek is used, the data from PainChek gets fully documented into their system. And again, they cover, I think it's 1.3 million beds of the 3 million beds in the US.
Thank you. Is pricing similar for US clients to Australian clients? And is CPI built into the pricing strategy, as Australian pricing appears to have held flat in recent years?
Oh, actually, well, I'll ask Ian to talk about the Australian price in a second, because they put a price increase in Australia. So in the US, I think we will get a higher price. It's early days, but our first client, we've got a very good price, we believe. It's more like it's a strong price, and we'll have to see how we go the next period. But we're getting a premium price in the United States right now. And Ian, do you want to talk a little bit about the pricing in Australia, because we have done a change?
Sure, yes. Yes, I mean, last year we started price increases for this is almost 15 months ago. We started price increases with our customers, and those are being brought up to a higher sort of price list at the moment, and that's continued going forward now. Now we've got an established market in Australia and New Zealand. We will continue with the standard annual increases to keep pushing the revenue up.
Thank you. The next question is, will the implementation rate materially improve in the US market, and what is the company doing to improve it overall?
Right, implementation. I think I covered that in the talk, but I'm happy to talk through again. There's always going to be a delay between signing a contract and then implementing. It doesn't happen on the same day. So let's take the example of Catholic. They signed for close to 4,000 beds on the 30th of September. So those 4,000 beds they signed up for went straight into the to be implemented category, because they hadn't been implemented, but they signed the contract. So there'll always be a lag between the two. But as I said, is that we do have new contracts now. The contracts now have confirmed implementation dates. That's agreed. That's normally maybe between 1 to 3 months after the actual signing. Depends on the size of the contract, and we have a 25% prepayment. So that change will close the gap gradually, but there'll always be a gap because we don't implement on the day we sign. Even the New Jersey contract, I think we signed it on the 13th of October, and we implemented on the 16th of October. That's pretty good. That's a 2-day gap, but there was a 2-day or 3-day gap. So I think people have always recognized we're looking to close the gaps, but the bigger the client is, the longer the implementation process. It's just normal business. So try to look at the two together rather than trying to separate them out.
Thank you. And the next question is, it's been mentioned that previously the point-click care integration will be a game changer. Can you elaborate on how this integration will specifically drive improvements in implementation?
Well, we have something like 25 to 30 integrations in Australia, New Zealand, UK, Canada, and the US. For all of those, it's very simple. The scenario is that when the PainChek assessment is conducted, we want the result to go straight into the care management system or the medication management system, or both. And what point-click care is one of those care management systems, which means the data and results are transparent in the docking station, the medical record station, immediately. And that's what it does. So in Australia, we have like 10 or 12 of these partners we've done, and we've done the same thing with point-click care. It just means no double handling of data. It just means the data is available for records, and they can act on it immediately. And that's what we've achieved. We're doing the same with Eldermark. And in fact, with the Yardi that I've mentioned, that actually is a really good integration that's just about completed. And between those 3 clients, that gives us something in the range of 1.7 million beds, where we go to one of their sites and we sell PainChek, then they have full integration into their medical records. And it's that simple.
Excellent. The next question is there any discussions around other potential US partnerships?
Outside of those, not at this stage. Those are the those are the key ones. However, we'll be at the conference this weekend, and there'll be other companies like Matrix Care who actually are owned by ResMed, and we've got some contacts in there who will be there as well, and we'll look to make contact with them. So our goal is to integrate with all of those companies. They all compete against each other, but as we've seen in Australia, they all accept PainChek in, and being a regulated product, the only regulated product, actually gives them great motivation, because if they don't have access to it, then they may lose their core business by not having full access. And if I can add to that, that there is a real sea change in this business where these guys will realize the way they survive or the way they really work going forwards is to give open access to technologies and products like PainChek. And that's giving the customer a great service. So when we first started this, it was protectionism. They didn't want to let people in. Now they realize they've got to go to open access, and they're opening up the access for products like ours to come in. And we do a deal with them. We do a deal. We give them either a margin, or we do a co-promotional. We do various deals with them, but it's a win-win situation for us, for the partner, and most importantly for the client.
Thank you. In terms of targeting the US long-term care market, can you just talk to how dependent this is on gaining CMS reimbursement approval?
It's not dependent on it. In fact, we discussed that today. CMS, when our product is actually, we discussed this today. When a product gets regulatory clearance, like we have just got, it automatically gets assessed by the CMS automatically, and they come back and ask, they potentially look to actually provide a reimbursement. That could take 3 to 6 months to hear back. You don't actually apply. It's a procedure they do, and if they think it's of great value, they may actually come back to us and say, we're going to give you a reimbursement code. If that doesn't work that way, then we can apply for a reimbursement code. So our strategy is to wait for them to come back to see if they're giving us it, and then if not, then we will probably apply. However, as I mentioned the talk, our real focus, first of all, are the not-for-profits, the faith-based organizations who are focused on better delivery of care, and that's where they will pay for it. Like the New Jersey home, they just pay for it out of their budget because it's part of their delivery. And don't forget, they charge significant amounts of money for those beds. The PainChek cost is, in reality, a very small percentage of it. So it's really about delivering better care and justifying it. And with the FDA clearance, again, I don't get boring about this, but once they see it's de novo cleared, and once they see we've got regulatory approval, that changes the whole attitude to the approach, because most products don't have that. Most are just products that are claiming things. We're a regulated product.
Thank you. And someone just wanted some clarification. So the question is, just to be sure, for the USA, you said they paid upfront and already implemented. Is this a typical expectation or just a great step? And do you expect all the others to be this quick?
No, I don't expect everyone to be this quick. Look, the New Jersey home had been pestering us for 2 years. They saw the product 2 years ago at a conference somewhere, I think it was in the UK or somewhere, and they said, look, we want this. How can we have it? I said, we can't sell it to you yet because we don't have the clearance yet. So they were very keen to get going. They just loved it. They thought it was perfect for their needs. No, this is I would say, I think it would be business as usual, but I do think that we are, as I said in the part of my presentation, we're hitting many of the key points that there's a big need, and the biggest need is their current pain assessment tool is almost like flipping a coin. Whether you get it, you from one rater to another, one carer to another, rating someone's pain, it's not consistent, it's not accurate, it's poor. What this does is take it to new levels, so they can deliver better service, deliver better care, but they can also then show how they're managing, that whole process better. And that's where we will fit in. And look, it's not a big spend. There's some significant margins in these businesses, and there is a significant costs to being in an aged care facility, and we fit in beautifully with what they do.
Thanks, Philip. I'll hand it back to you just to provide a closing comment.
Well, I just want to sort of say thank you to everyone, and I hope I haven't sort of gone too on about the regulatory clearance, but it is so big for the business. I've been doing medical devices and stuff for 40 years, and it's the first time I've ever been involved in something that's been a de novo. And the nearest thing was to that was when Cochlear actually got into the markets. I was already, it was before I joined the company, but once they got de novo clearance or a similar clearance in the United States as the first thing of its kind, it set them up. It set them up as a business. Still today, you can see where they are, and still today they dominate the United States market as well as the global market with their products. So I just want to reiterate to people, thank you for your support over this period. It's taken us a long time to get to this point. I just want you to know that I think now we have the product, we have the people, and we've got the processes in place to really deliver. Now we've got total access as a global business. And I think the journey we've taken has been the perfect journey, establish ourselves in Australia, get into the UK, and now we go full speed into the biggest market of the world.
Great. Thanks, Philip and Ian, and thanks to everyone for joining today. Look forward to bringing you more soon.
Thank you, Matt. Thanks, everyone.